Benny Digital Rigged AI. We are looking at SPY and QQQ, February 20th, 2024. A little bit of a challenging day. I think the main reason being this is maybe like the second time all year we've opened lower and moved lower. And that's a little bit difficult, right? When you're so familiar with trading a market that goes up every single day, you kind of have to reset, rebalance, and look at it differently because there are two different ways to trade it. Now, when we take the bearish high volume approach, it wasn't terribly difficult. And then the craziest thing is at the end of the day, we got the rippy, right? And I mean, look, awesome trades at the end of the session. You could have just stayed out the entire time, logged in 30 minutes before the close, and caught two 100% plus trades like zero stress. They just went straight up. That is markets. We're going to get into every single part, especially how the three strike rule it rules, man. It absolutely rules. Let's go. All right, we're starting here with the open session. First, and let me be absolutely clear here, it is difficult to get 100% during the open. It is hard. You need a giant move to happen very quickly. You see tons and tons of volatility at the open. It is not necessary to trade. Now today, our data provider that we get option flow from was delayed. Sometimes that happens in the morning. So you see the white line here, and we don't even start really getting all of that data until later, okay? But look at the white line. Whew. Volume is high right here, right? Anything over 110, 120, that is huge, right? So what does that tell us? What do we think when we see that? Well, price action is moving down, and we expect that move to continue, right? Because it's high volume, we expect this down move to keep going. Also, we think, hey, it could go more than 3. If it's low volume, under 100%, 3 is the max. That's where we want to see a reversal. But because right here, we're at 134, 138, we expect to go lower at some point. And here's how it happens, right? So we come down here right after the open. We're 2 strikes down, and these are really good alerts. Let's look at this one right here. So boom, right? PS -4, and you get that rip up. We are not even 2 strikes down, 1.72. Straight up, absolutely no drawdown. If you take this trade, this is a good trade, right? The thing you need to keep in mind is you are trading against the trend. We're in a downtrend, you're trading against it, so hey, 30%, 40%, 50% is great. The second thing to understand is here, right, at 11 o'clock, this is late. And what you can see, PS minus 0.09. Right before that, minus 391, minus 393. Okay? So immediately when that comes in your head, in your mind, you need to know that, look, we just went from here to here, okay? You're late. This is late. This is trading against the trend, and these are bad alerts. And you can see, hey, we move back up to this 497 strike and then keep going lower. When we get down to 495, 3 strike roll, right? 3 strikes down, we chop for a long time. We just chop. Ooh. We get the nuke and then chop, okay? The old ping pong, bing bong. What you have to keep in mind here is it can go lower, obviously, because volume's high, although volume came down pretty significantly, right? Because here we're at 136%. You get this move, and we just drop to 117. So what you have to keep in mind here is, of course, it can go lower, but 3 is normally what happens. 3 is normally the bottom or the top. So there's a ton of risk here, right? Because, hey, we know 3, we could go 4, we could go 5, but it's risky. And you can see we don't even go beyond 3 the entire session. When this comes in, obviously, it's late. There's just a big move up. Okay, maybe you take this, but remember, if we don't break the strike, we don't break through 495 right here, boom, we are out. We are out. If you want to be a profitable 0DTE options trader, you have to kind of stay out of this. And even though we move higher here, do you see any bombs? Our saying is no bombs, no trust. We don't trust this move, okay? Because Wall Street lizards aren't buying a ton of calls. I mean, it's a little bit bullish, but no, look what happens. We get a mega nuke right after the Robinhood close. So when you see this happen, traders are reacting a little bit late, right? Because here you're late. You're late. Let's go back to the full view, right? We have to know that this is down 3. This is extremely risky, especially because at the end of the session, we tend to ramp up. And that's exactly what happened. So remember when I said earlier, you could have just logged in the last hour and taken this alert. I mean, look at it. A little bit of a drawdown, but because SPY closes higher, you get 166%. Like that is incredible, right? That's incredible. That's going here, and boom, you're getting that move right until the end. So just looking at SPY again, we're moving lower. Hey, this is not a bad trade. Bulls here, early, right? Early. This one, we can take it, we can trade it, but we need to know we're going against the trend. And what? We want to be in and out quickly, get our profit and go. This one, we're late. Here, we're late. It's moving down. Stay out of this. Right here at the end. We had higher volume on QQQ today, and it was much easier to trade. Much easier. Let's look at this thing. One, look how perfect this timing is. It's at the top. It's a bear above. And my goodness, this thing goes for a 283% max gain. And look, no drawdown. 1 strike, 2 strikes, 3 strikes. I mean, you get 3. That's how you get 100% at the open if you take this. Now, when we're here, 9:45, this is 15 minutes into the session. What we have to be thinking, first, volume, 120%, as you see. Because of that, we think, hey, we can go down 3 or more. This is 3 right here at 426. This is not a good trade, right? Because we know high volume means the move can continue. And here, when this fires right here at 9:52, right? Volume is 134%, 137 right here, 0.12%. This is going against the trend. We don't like it. Here, look how low we are. We're a little bit under 3. It can keep going, but we need to understand there's more risk, right? There's more risk for bears the lower we go. And I mean, they were profitable, right? Because where do we bottom? 1032 before moving up. Oh my goodness. Down. Bull. You're looking at this, 76%. That's nice. 2 strikes. And look at the clean tag. As soon as we get up higher, the bears hit it again. I mean, look at that. This is what it's like trading high volume, okay? Over 120%. Literally, if you just switch, right? Okay, we're down super low. I mean, look at PS here. Minus 762. Boom. You get a move higher. Okay. PS is -2 again. Epic trade. Epic trade. Even if you get out here, look, we can re-enter again. And look, you're getting 100%. And that's coming to right here, essentially. So, I mean, that's 1146. Basically 45 minutes later, you're getting 100%. Now, the middle is a little bit tricky, right? We move down, and then 424 is low, man. That is low. That is low, 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 right? And that's where we bottom, okay? 426 is 3. 4, we're 5 down. 5 down, we need to know. Look at the PS on this. Minus 11.18. That is a very high number. That is very scary for bears. And look at the flow as we go higher. It's very mixed, right? There's actually a lot more bulls than there are bears. We go higher, boom. The market did its thing, which they always seem to do, which is kill as many people as possible. And that happened right here. You saw the nuke on SPY. The same thing happened here. We're essentially at 427, and then we go all the way down to 425. But look what happens. 1533, you get a bull bomb. This goes for 186.99%. Right here. We were actually late to this trade, and because we were feeling dangerous, we bought the 427. And look. Awesome. That's what we play for. That's what we trade for. We want the outcomes where the win covers all of the losses. And that can be 200%, that could be 300%. That is what Zero DTE is about. Time for a little bit of Q&A. JCP in Discord asks, why did you think it would rip at the end of the session? Well, first, we were in puts right here. We caught this move down, as you can see. The reason why we bought those was because this move up is not supported by bulls. When we don't see an alert come in, and remember, an alert means option flow, large size, we don't trust it. And because we don't trust it, we keep that bear bias that the price action is going to continue going lower. Now, this is a little bit of advanced. Takes time to do this. But hey, small trade for our account size, and it paid off big. And what happens next, right? We nuke and then start to go. What we've seen watching, looking at this day in and day out till our eyes bleed is, hey, 3 strikes down. If they don't nuke past it right here, we're going higher. And look, 495 is down 3 perfectly. Not to mention, you get the support here, right? 1533, and look at this thing. 187%. That's at the close. That's buying and holding until the close. Like, that's all you had to do. Come in, 1533, take this trade, walk off into the sunset. Because boom, you get a rip at the end. This is like the setup that we love to see. And look at where they close this thing. Not even 3 strikes down. Absolutely incredible. But, I think, the answer here is obviously we don't know. But you get a nuke for no reason. Just Wall Street killing people. And what would kill people more? Hey, we just killed everyone right here. Everyone here is exiting. Hey, this guy made money. Hey, boom, we're going to rip it at the end. That's just how the game is. Here, you're buying pain. You are buying this bull pain because we're below 426. Absolutely epic. That's what you look for. And here, we take this trade every single time. We take it in size. If we lose, it's okay because the winners will always cover every single loser, even if you draw down 50%, right? You win big. You win huge. Time for a little bit of Q&A. JCP in Discord asks, why did you think it would rip at the end of the session? Well, first, we were in puts right here. We caught this move down, as you can see. The reason why we bought those was because this move up is not supported by bulls. When we don't see an alert come in, and remember, an alert means option flow, large size, we don't trust it. And because we don't trust it, we keep that bear bias that the price action is going to continue going lower. Now, this is a little bit of advanced. Takes time to do this. But hey, small trade for our account size, and it paid off big. And what happens next, right? We nuke and then start to go. You know, what we've seen watching, looking at this day in and day out until our eyes bleed is, hey, 3 strikes down. If they don't nuke past it right here, we're going higher. And look, 495 is down 3 perfectly. Not to mention, you get the support here, right? 1533, and look at this thing. 187%. That's at the close. That's buying and holding until the close. Like, that's all you had to do. Come in, 1533, take this trade, walk off into the sunset. Because boom, you get a rip at the end. This is like the setup that we love to see. And look at where they closed this thing. Not even 3 strikes down. Absolutely incredible. But, you know, I think, you know, the answer here is obviously we don't know. But you get a nuke for no reason. Just Wall Street killing people. And what would kill people more? Hey, we just killed everyone right here. Everyone here is exiting. Hey, this guy made money. Hey, boom, we're going to rip it at the end. That's just how the game is. Here, you're buying pain. You are buying this bull pain because we're below 426. Absolutely epic. That's what you look for. And here, we take this trade every single time. We take it in size. If we lose, it's okay because the winners will always cover every single loser, even if you draw down 50%, right? You win big. You win huge. Okay, second question. Blunderbot asks, how do I recalibrate a 50% win into a 100% win? Well, buddy, if I knew the answer to that, I would not be making this video. But I think when you're starting out trading 0 DTE options, like the most important thing is you're able to capture as much upside as possible. We want to win big and lose small. But winning big, it sounds easy like in theory, but actually it's like really difficult because you might get to 30, 40, 50% and think, oh, I should take the profit. This has gone against me so many times. I should cut now. And then it goes to 200. Then it goes to 300. So it's difficult, right? Because psychologically, we are literally wired to add to our losers and sell our winners early. Don't know why, but it's just like that's how we are. So until you can break that, it's going to be challenging. And I think like the only way to be able to do that is capturing that upside risk-free. So, hey, if you're trading 2 contracts, you get to 50%, you're selling one and letting one ride because you don't know how you're going to react to a 100% trade, to a 200%, to a 300%, to a 10x trade until you've been there. But you need to get there first. And the only way to do that without going crazy is running risk-free. Running with free contracts that are covered, that, hey, if you lose and they go to zero, you are break even or a little bit better. Paper trading, some people say paper trade. Unless it's your money, you're not going to treat that paper trade count the same. You're just not going to be able to do it, right? Because it's fake. You're going to know it's fake and you're going to do whatever. That's just how it is. Still here, God bless you. One thing that's really interesting following up to BlenderBot is if you just held these alerts until the end. Let's look at them down here. Look at that. 271%, 180%, 180%. Because we got that end of day rippy. So that's what I'm referring to when I say, hey, we want to capture as much upside as possible for free. If you're taking this here, as soon as you get to 425, we can sell down to runners. I mean, the same thing here. You're getting to 426, can sell down to runners, and capturing the move if it happens, right? And it did happen today. Will it happen tomorrow? God, please. But that's what this is about. If you're selling your positions too early, you're trading too much size, and if you haven't gotten to the point where you're able to do a 100%, 200% trade, then you probably need to reset and make sure you're getting out and letting the runners go free, baby. Let them rip. Let them go. We'll see you guys tomorrow. Have a good one.